The FTX collapse remains the talk of the town as the crypto contagion continues to spread. Now, everyone knows that I'm primarily a technical analyst and I follow the news, but we have a whole slew, thousands and millions at this point, maybe millions of billions of on-chain analysts joining and piling on to tell us their thoughts on what's happening, but most of them suck. So I like to talk to on-chain analysts that actually know what they're talking about, like the OG legend, Willy Woo. Now, we're going to obviously talk about what lessons we learned from the FTX collapse, maybe if there's anything on chain that we can look at to see what might come next, but also just generally to talk about where the space is at, whether we're likely seeing our beloved assets bottom or whether there's more pain coming. I've got Willy Woo right now, guys. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Streets. Before we get started, please subscribe to the channel and use your on-chain analysis to hit the like button. That's not even a thing. That made no sense, but it just came into my head at that moment. So yeah, guys, listen. It's been a rough run in the crypto space of late, but I'm starting to feel a little more bullish. Maybe I'm crazy, maybe I'm nuts, but it feels like most of the bad news is starting to get priced in, and we're starting to see my favorite indicator in the world ever of all time, which is mainstream media telling me that Bitcoin is going to zero. It's my favorite thing. I tweeted about it this morning. The European Central Bank said that, here we go, the apparent stabilization of Bitcoin's value is likely to be an artificially induced last gasp before the crypto asset embarks on a road to irrelevance. Wow. They said that, and they also admitted in the paper that it was a threat. So, of course, I wrote, hey, bottom is in when I saw that tweet. But Willy, also, I just saw commented on that tweet. I'm going to bring him on right now. Willy, how are you, man?
Hey, Scott. Good to be here. This is kind of the first podcast in a while, eh?
Yeah, man, we got to keep you in the mix. We can't just allow you only to send snarky responses on Twitter. We got to have you on YouTube as well. Yeah, you're like not so secretly the funniest person on Twitter, and your comments, I just die every single time you respond to anything because you share that sense of horrid sarcasm, I think, that I have. But this is what you said about the European Central Bank. This is an absolute dream. I didn't think this would happen so quick when I first researched Bitcoin 9 years ago. Central banks are acknowledging Bitcoin as a threat to their existence by funding it. Right? I mean, the road to irrelevance. Could they be any more like obvious here as to what's happening?
Yeah. And I think following that, I mean, this thing is stabilizing. My God, every time it stabilizes after a bear market, that's pretty telling that it's accumulation phase, right? It's the bottom, right? It is the bottom. Well, it's sideways.
Willy, we just lost your sound there, at least on my end.
It's a fairly good sign of setting in. People are buying at these prices. Yeah. Great.
Hey, Willy, can you hear me? Because we lost your sound, man. Can you hear me? I seem to have lost your sound. Okay, you can hear me at least. You sound like a creepy robot from probably from the metaverse, if I had to guess. Too many yeah, you sound like Max Headroom. Maybe it's the internet. Maybe it's your AirPods. I'm not sure.
Yeah. Sorry, I don't. You blanked out for about the entire.
I'm going to try to send you a message over here. I think we lost Willy for the moment, but try to send him a message. Maybe he'll be able to switch that. I'm assuming that it's his connection. See if we can get Willy back. Give it a second. I could do like a beatbox or sing a song or something. If you
can you hear me? Testing. Hello.
No. Here, why don't you sign back out and sign back in? Yeah, we're gonna let him sign out and sign back in. Hey guys, what's happening? Awesome. Probably needs to reset the whole computer, maybe the internet and all of the internet in his country. I said a hip, hop, hippie to the hippity, hip, hip, the hop, you don't stop, the rock to the bang, bang, boogie, said up, jump, the boogie to the rhythm of the boogie to beat. Okay, I did Rapper's Delight. Let's see if Willy's back. What do you got?
All right. No earpods this time.
Oh,
Here we go.
We did it. We win. We won.
Okay, where were we?
Now go back to what you were saying.
Where did I cut
Accumulation was
out?
the last word I heard.
What's that? Oh yeah,
The
yeah.
last word I heard was accumulation.
It's ironic, eh? They think it's some sort of conspiracy that some unforeseen scammers are holding up the price of Bitcoin just before this thing's going to collapse to zero. Yeah, I mean it's that time in the cycle really that the accumulation does come in, right? Like people buy and they put a floor on the price. The volatility drops, and we saw that in, when was it? Was it 2018? 2018 bottom, 2015 bottom. We even saw it in the 2012 bottom. So yeah, sure. People are holding the price up. That's because they want Bitcoin.
Yeah, if anything, you would say that if there's artificial pressure, it would be on the sell side, right? I mean, we have bankruptcies, liquidations, forced liquidations, I should say. The notion that somebody's artificially propping the price up seems to be the opposite of what would be happening.
Yeah, right. It's being absorbed. Like what was really interesting with the BlockFi bankruptcy, we saw a sort of pullback. It wicked down beforehand. I kind of think that was sort of inside sellers knowing that that announcement would happen. It wicked down, what is it? $500, something like that, and it got quickly absorbed. And then now we're breaking to the upside. So I think we've got a lot of buyers at this price. Certainly the indicators I have are showing, when you see a lot of coins moving and the price going sideways, that's a sure sign of accumulation. And so that's been happening. I'm tracking it. That's the reason why it's going sideways. So there you go.
We were going sideways before the FTX collapse, right? And then sort of global markets started to turn around to the upside. My feeling is that we'd be sitting at like 25,000 right now, if not for the whole FTX situation. Do you share that, or do you think that this last drop was sort of baked in anyways?
Yeah, very much so. The indicators had bottomed. Particularly one I was looking at was really supply that's underwater. Every single cycle, there's a trend line that's, it trends downwards. And when that trend line breaks to the upside, it's always happened in the middle of an accumulation zone, and it broke in that sideways before the FTX sort of debacle. And so actually that's my view, is that we were setting up for a decent accumulation phase. We're building that multiple month accumulation bottom, and then wham, we had another round of deleveraging, but accumulation is still happening. So yeah, I agree. I think that we would be in the highish, not the highish, but let's say mid, between the
23 to 24, 25, somewhere in there. I think.
Yeah, I think we were setting up for like 18 to 24 sort of sideways band for a few more months. And then we had the deleveraging happen. So we're now continuing that in the 16 to 18 band now. But yeah, I agree.
Yeah, we're not so far below breaking back into that other sort of range, though. I actually had pulled up one of your tweets here. You can see it says Bitcoin bottom is getting close under the max pain model. Historically, Bitcoin price reaches macro cycle bottoms when 58 to 61% of coins are underwater. That's orange. I'm going to bring that up. Green shading adjusts for the coins locked up inside GBT stress. This is the supply underwater you were talking about. But could you talk a bit more about what that max pain means?
Yeah. So that max pain is like what those are contours of where the price has to hit till how much of the coin supply is underwater from their buy price. And so that is, I believe that's roughly 58% to 60% of the coins being underwater. And so that's where you get that band. Within that 2% band has been where it's hit in all the bottoms that we've had in the last few cycles. So I'm just tracking that as a target, right? And that's climbed. I think I'd have to have a look.
Yeah, I mean, here it looks like it would be top around 11, 12, bottom around 10 or something. But obviously,
yeah, let me just grab it.
Yeah.
I've got the chart.
Yeah, if you've got it, you can hit present at the bottom to share your screen if you want. If not, you can just take a look at it.
Let's do that. I'm just gonna refresh that with today's data. I'll present it now.
Cool.
While that's loading. Let me just push present. And
so
I was just going to share the entire screen.
Yeah, that's fine. Or you can go, when you go to present, you can hit the window and share just your window. But either way works.
Share screen.
And then I'll be able to bring it up for you.
Share screen with 2 minutes.
Hey, guys, we are very professional here. We do a lot of legwork in advance, if you haven't noticed. We prep people.
I'll just share the screen. Just ignore the private keys, okay? Okay, I've got to... do I have to restart the browser? Oh, my God. All right.
It's fine.
All right. Let's
for a professional outfit here. Okay. It's fine.
Quit and reopen. Okay, I'm going to drop again. See you soon.
Bye, Willie. See you later. He'll be back. Bye. Gone but not forgotten, guys. Yeah, so we're going to bring him up to be able to look at that. But obviously, as you can see here, he's going to give us the updated version. But you can see that if you're looking at these right now, we're very close to that same point where we've had the bottom every single time in the past. But listen, it's just an indicator. Gregory Russell says, I blame weed. Patrick Wilson says, tab groups, anyone? Yeah, we're doing our best here, guys. Whatever. John English Tech says, FTX or not, we're headed into consolidation for a little longer. I think we all kind of generally agree with that sentiment. How you guys doing over there? See you all over here doing comments and saying things and making words with your fingers, your brains. Compelling stuff. So listen, I'm going to go back right here. Let me close that chart. I'm assuming that Willie is going to reappear, but keeps us all in suspense. Meanwhile, have you guys seen that SBF is back? I think he has that New York Times conversation today that you can pay $2,500 to see him have a threesome with Janet Yellen, and I don't know who else is on there. And he's also going to be on Twitter Spaces tomorrow. I'm bringing Willie back right now. We'll see if it works this time.
Let's give it a shot. Share screen.
I feel like it's going to work.
Present. Share screen. Okay. Doing it. Oh,
3,
here we go.
2, 1.
That'll do. Share that window.
There it is. It worked. It worked.
All right, cool. It's still pulling up. It's a lot of data.
Yes, we did it, guys. We did it.
Okay,
we're so good at technology.
So actually, there's this sort of pencil sketch chart that I've posted a few times. And what we're actually doing here is looking at this is actually a complete profile of the density. You can think of this as like a volume profile for the traders out there. We get dense lines. That's where a lot of coins have last traded at that value, right? So it's kind of like a volume profile, but it's a profile of how many coins traded at that price out of the whole Bitcoin supply. And I cropped it off at down to here, which is there's another 28% of the coins that traded below that price here. So effectively, I'm looking at there's a particular contour that hits all of these price bottoms, right? And that's the contour of how much of the supply is underwater. Obviously, if you buy here, as the price goes under, you're part of the losing squad until it hits a point where it doesn't go any further. That's your max pain. And this is a charting as we go through 100% of people in profit at the 70,000 top. And as the price starts trading down, we cut through all these contours. And now we're currently at about 45% of the supply is underwater. And actually what I was saying is you can draw this trend line actually. I can't draw on this chart, but you can draw a trend line here. And when you get this sort of change in movement where the supply starts to climb and not experience so much pain, that's usually happens in this accumulation belt, right in that zone there. So it's before the breakout, and it's been reliable with past cycles here. And you get the breakout. I think if you draw it to here, that's the breakout. It's the middle of the accumulation zone. And actually, we were forming a really nice trend line here. I remember monitoring this at this point. It hit at this point, it hit there, and then it snuck out. And it stuck out right at that zone here, and it was ready to start to, put in a floor. And then we had the unwind from FTX. So this now looks like a bump and run pattern where we break out of the trend, and then we're now retesting the trend line. In my opinion, that this will test well and go upwards. And here we go. Let's draw that chart. So what I've done here is actually now also account for the grayscale coins, which is, I think it's about 3-4% of the Bitcoin supply, maybe even more, 4.5%.
Yeah,
something crazy. 630,000 Bitcoin in there.
Yeah.
And then if you look at what's happening inside there, roughly 60%, assuming 60% of the coins are underwater. I did a survey, and you kind of can account for what's happening in that black box, which won't be shown on chain. The green sort of corrects for that. And so that is currently today at $13,000 and climbing quite quickly. You can, if we zoom in to this zone here, you can see that that's climbing up quite quickly. So we're getting quite close to a touch. It doesn't have to touch every time. We didn't touch there. Yeah,
that's damn close. And even if we chop sideways, that can just rise to the price, right? Price doesn't have to come down to support. Support can come up to the price in this situation, kind of like the moving average.
Exactly. Like here, this chopped sideways and then it caught up. So that's looking good. And of course, we have in the on-chain world a ridiculous amount of macro indicators. You can see it in we've got this sort of stuff. Like, interestingly, here's a destruction bottom. We're using Bitcoin's destroyed. So effectively, when coins move from an old hand that bought a long time ago and passed to a new investor, that carries with it not only the volume of coins, but the lag and the amount of time it accumulates in the wallet. That's called destruction. You can use that in a way to create this kind of model where we're trying to catch the bottoms. And so as old coins sell out, it lifts this floor. And so this is a model that I did back in 2019. So about, I think it was around here we built this model, and that held with the COVID dip, and now we're really on it. So it'll be interesting to see if this model breaks or not, even with all this unwinding. So that model there is hitting the floor. So that's another one to watch. And so we have a crazy number of these indicators. Like, you can see
every single thing is showing like potential bottom, right?
Yeah, right. You can have NVRV ratio, which is, pretty much how much it's valued compared to how much people invested into the network, and bottom again. So, lately I've been taking all of this stuff and going, let's grab it. This is like 13 of these macro indicators, and I've put them all together. Right. And it was like, there we go. This is actually, there's more than two than that, right? It's like, there they all are, right?
That's a lot.
That's, it's, so what I like about this is it's starting to show, it's starting to show us all of them in concert. And so I've grouped them into, sectors. Like this one, the cyan color is the hodl power. You know, there's different colors here. This bluish is measuring the profit from investors, and each one of them are composited of many, you know, maybe up to three or maybe even four different metrics. And so you can look at it and you can see, well, like this bear market, they're all very much agreeing.
Yeah, and they're also agreeing that we're at the bottom.
bottom.
Like if you drew a support on any chart, it would be very clear that we're sitting at it, right? I mean, that's
Yeah,
if
right.
you just draw one horizontal line there, it's very obvious that it is at support.
Yeah, I mean, this is yeah, that's the thing. It's not only we're in the bottom, but in this bear market, they're starting to agree with each other. Whereas the prior market, there was a little bit of discrepancy in different dimensions that you're looking at. So the broadness of this area was wider, but they're very much coalescing into very much agreeing. There's a little bit more uncertainty since we're bottoming. It's widening out, but mostly we're in a bottom zone. It's you know, I mean, something seriously bad would have to happen, I think, for us to, you know, break this down a lot further and have, you know, we haven't done this. I guess ever in Bitcoin's history. You know, we dipped as low as here in the early days, but you can also see from these metrics, they were pretty wild. They're pretty
2011,
wild.
yeah.
Right? 2010, 2000 was completely different industry back then, and it was very wild moves, and the needles were spinning everywhere, right? And then we sort of capture it. The way this works is it's a 4-year metric on standard deviation. So we haven't even coalesced 4 years of backtrace here for it to normalize. So here, around here, it starts to become normalized, right? So like from here, it's very reliable. So anyway, that's I mean, that's my view of it. Actually, well, it's not my view. It's these are metrics built by all of us, really. So
Okay, so I mean, worst case scenario is we get another FTX like event, a Coinbase or a Binance or some huge, which I'm not saying that's going to happen. My God, people are going to like edit that and be like, Scott Melker said Binance is going to collapse. No, not at all. But is that what it would take to push this below 12, 10, something like that? I mean, what is there a number that would surprise you at the bottom? Because clearly you've shown some indicators here, you know, that say price could easily go to 10 or 12. So clearly I don't think 10 or 12 would shock you at this point, right?
Yeah, I don't think like 12 wouldn't shock me. 10, I think everyone's wanting, and so it usually doesn't hit what everyone wants. Yeah. So 12 wouldn't shock me. 12, 13, I think. But I don't think, you know, if you think about that, it may run away from here. It may drop even further. These are very broad stroked indicators, but it's probably not a bad time to dollar cost in. If Binance collapses, yeah, well, that's a nuclear winter, right? Holy shit. You get FTX.
But I would have said that. I would have said that about FTX, right? If FTX collapses, it's nuclear winter, and here we are 1,000 below that range we were talking about. It's really not as bad as it seems.
Oh, it's it's. I mean, you know, with FTX, there was on-chain evidence that this thing would
talk about that. That was the title of the stream, anyways. So I forgot because I have ADD. Yeah, let's talk about that.
Let me get into Glassnode.
Yeah.
I mean, I trade on FTX, right? It's where I like to trade. That, you know, I gotta hand it to SBF, is that, like, okay, he stole a lot of money that wasn't his, but the exchange itself, he built a good product.
Well, right. I mean, that's the problem, is that he built a good enough product to get everyone on there right before stealing their funds and collapsing it. So it's kind of the worst case scenario, that combination.
Just got greedy. Just got very greedy. I mean, if he'd stayed in the long run and didn't do the greedy stuff, I mean, he would have the best exchange out there to use. Can you see my screen?
I can. I'll add you right now.
Okay, let's go to exchange balance, right? And here we go. So these are all the coins on exchanges. Everyone's getting the coins off the exchanges right now. Let's zoom into FTX. This is Bitcoin only right now. You have to go onto CryptoQuant, I think, to get the stable coins. So this is the run on the bank here, right? This is like everyone getting the fuck out, right? But you'll notice that there was also this trend down, and also what the hell happened here, right? I saw this and I thought, is this an error in FTX labeling on Glassnode or something? It just didn't make sense. They'd been building up this stockpile of Bitcoin, you know, as they won more and more trust. This is all of our customer funds on that exchange. And then suddenly, as Three Arrows collapses, 55,000 of their 130,000 Bitcoins got withdrawn. Right. And I think SBF see, we're doing a bit of cold storage movement here, nothing to be worried about. No one called them out on it. I thought it was maybe this move to a new labels that were still FTF. You see this sometimes, as you see,
right, moving from one exchange wallet to another, and nobody knows the new wallet. Right.
Yeah, right. But Glassnode didn't pick that up, right? They maintained that it went out of the exchange. So no one actually called it out. And after that point, so what happened there, right? Is like, did Alameda need to plug a hole in their books after 3AC collapsed? But after that, look at this. This is like a constant trend downward with Bitcoin reserves. Like the guys that knew that FTX was not good, and there was a constant withdrawal. So as the FUD was happening on Twitter, I was taking a look at this chart, and I'm like, this does not look good. I'm like, I think I got all of my stuff out of all my Bitcoins out of FTX when they had like 6,400 Bitcoins left, like down in this region here. So anyway, that was that. There was definitely.
So basically, he lied, said we're just moving some things to cold storage, but clearly that was their. I mean, now all of the speculation, which seems somewhat clear, is that Alameda blew up, and basically it was probably moving the coins to Alameda or something to try to prop them up.
Yeah, exactly. And now we're like looking, gee, of course we looked at everything else now and all the other exchanges in the industry, and it's like, who's good for the money? And immediately we're seeing proof of reserves, Binance start to come out with this. And yeah, I noticed they haven't disclosed the liabilities on their proof of assets. So it's only half of it.
I talked about that at length yesterday. Yeah, it's a bit crazy. How do we know that these are FTX addresses and not retail wallets? How do they identify this? You said that sometimes they don't know if it's a new wallet, and you see these sort of trends in Glassnode. How does Glassnode actually identify an exchange wallet?
They use a third party as part of it, and then on top of that, they add their forensics clustering type algorithm on it. So they already have an automatic algorithm that's looking at all addresses across the network and clustering that just based on interactions between the wallet addresses. And you can see them, they resolve into clusters of entities, meaning that this wallet likely belongs to this known cluster or this person or this exchange because of the interactions. And so it doesn't take long for the interactions between those coins to start to give away telltale signs that it is belonging to a previously known entity. So that layer helps them resolve this. And then there's an army of people in the industry that are labeling different addresses as this is FTX, this isn't. We know this because I deposited funds here, and that's their address. And so different you can actually just fire small deposits into the exchanges, and you'll see it arrive, and from there you can kind of build up a picture and cluster it together. So yeah.
Did people know Alameda's addresses? Because that would have been really helpful, right? If we saw this massive movement out and it was at Alameda addresses, but then again, he could just say it's cold storage and people probably wouldn't be able to differentiate.
I think Chainalysis would have a really good read on it. I don't know if they've come out with anything. It'd be really good to see if Glassnode could do something like this, or even CryptoQuant. But I haven't seen any of that data come out. Yeah, I mean, right now it's like, it feels very much like most of this is priced in, unless say Binance blows up. I noticed that Binance, SAFU fund is, it was 1 billion. I think it's about 800 million the last I checked.
Yeah, I think they were saying they were going to push it to 2 billion, but I don't want to be quoted on that. But I know they are looking to increase that.
Yeah, I mean, it's if you look at it right now, with like 800 million backing $68 billion of assets, and then you take into account, over 40% of it is highly correlated in BNB tokens, and the other bit is, I think 68% is both BNB and BTC. Like if Binance goes under, like there's a major hole in that in their balance sheet. Like their insurance fund is like 68% correlated, being Bitcoin and BNB. So you might say maybe 250, 300 million of it is solid, as in US dollar.
That's nothing.
Right? It's like 50 basis points. It's like 0.5% or less of assets under management is backed by the SAFU fund. So
right. So a Bitcoin crash or somebody targeting BNB in the same way that CZ effectively targeted FTT token could cause a similar situation by that rationale. I mean, I don't think it would. I think they're bigger. And I mean, listen, if that happens now after they've seen it, and he did it basically like was able to send one tweet and do it, you'd have to think they're prepared for something like that.
Well, FTX was a very different kettle of fish, because they pulled all those funds out, and then it was on Alameda's balance sheet, and they had all this leverage secured on FTT token. This would be the case only if Binance collateralized with BNB token, taking huge leverage and risks. They own 40% of the BNB. Like, I don't know what it is actually. Well, they haven't sold their 40% on the creation of that token. So there's a lot of money there that's in BNB tokens that they're sitting on, and obviously they're plugging that into the SAFU fund to give us a psychological sense that it's a big $1 billion. If they're going to bring it to 2 billion, what are they going to fill it with? Is it going to be more of their stockpile of BNB? And so we that's a big question, is like, what is actually inside of this stuff? CZ said that they never use BNB to collateralize, but they're definitely using it as collateral inside the SAFU fund. And so
right.
there's
because
stuff
they're not borrowing against it doesn't mean they're not using it. Right.
Yeah, it's still collateral, right? It's collateral. It's like in the case of a liability, which is we're going to pay out to people who are losing money on Binance Exchange. That's the collateral that they're going to have to sell. So that's the liability. So I mean, it's not. I mean, this has been a good thing. I think the whole industry is starting to clean up, and everyone's looking into the risks involved with the counterparties. So that's a good thing. And, I look at this as, wow, crypto had its 2008 unwind. It's like with what happened with banking and TradFi in 2008, we learned that lesson very quickly the moment we could get leverage in the system. And, remember, leverage in the system only came about starting with BitMEX in 2018. That was the first time we get significant leverage in our ecosystem. So it's only in this bull market that we had significant leverage that built up. And the first time we could get leverage in the system, look at what happened. Like, we did everything in this industry. The players, the institutions at least, did, not we, but the institutions did everything that they could to take crazy risks, just like banks did in 2008, leading up to 2008. So, it's a good lesson. Hopefully, we move on from this and learn these lessons and build a more, legit, more rock solid industry from here.
Before we go, so obviously you saw this massive move of coins leaving FTX in, it looked like May, kind of June, and it was a steady downtrend from them. At one point, that actually sparked you to say, "Shit, I'm removing my own coins from this exchange just in case." Are you seeing anything else like that from any other entities at the moment that would be fair warning to people, or does everything look somewhat kosher at the moment?
Not really. I haven't seen that. If anything, the other exchanges are getting more collateral or more user funds. Binance is climbing. That's the main one. Yeah, like Bitfinex are climbing, like Kraken's. Kraken. Oh, interestingly, Kraken is. I'm just looking at it now. Kraken's dropped a lot in Bitcoin. Oh, that's interesting. I would have thought they would gain because of their proof of reserves. They are more of a trusted player. So I don't know what's going on there. Maybe they can tell us what's happening. But like Coinbase has dropped. It could just be a lot of confidence has left the market and everyone's pulled into cold storage.
Right. So you're seeing retail pulling their coins off, but not necessarily the exchange itself sending them away.
Yeah, no, I think well, we don't know what's happening, right? We've got to make a guess or build a thesis around it. Kraken's following a very similar pattern to. Well, let me just share the screen again. That's maybe
Sure.
someone can take a look at that. But like, here we go. Here's Glassnode on this. This is Kraken's Bitcoin reserves, right? And it's very similar. Like a lot of coins came out of there, very similar to FTX actually. I wonder if that's just not that just could be the clients that are pulling to plug holes in their balance sheet institutions. We had the same sort of grind down and then a drop here now. I mean, they've still got 90,000 Bitcoins in there, but there was a high of double that when they were good. So I don't know what's happening there. And that just could be retail. I'm going to go to hourly resolution.
It's interesting because it feels like Kraken's actually been like one of the winners as far as perception. Like I think that people view them as safe. They like how Jesse Powell has approached this. So I'm actually a bit surprised to see them riding that same trend.
Yeah, I mean, let's have a look. I'm just going to pull hourly resolution, which is obviously 24 times more data. It's a bit slow. Here we go. Just going to see if it's smooth. It's smooth. Yeah, and that is relatively smooth. That's like
right. It's not a straight line.
Yeah, it's not one massive wick. So that could just be clients just getting coins off exchanges.
Yeah.
Right? So yeah, I mean,
yeah, the FTX was basically like a straight line down.
Yeah, I might. Yeah, well, that was the bank run. That was very fast.
I mean, that's a bit aggressive. Yeah, man. Yeah, and it's
yeah.
even way more aggressive back there at that same time frame. If you look,
Yeah, that's quite. I mean, that's a quite aggressive withdrawal there. Another, very sort of jagged drops down. Big step changes down in big chunks for FTX. So that move was done by big withdrawals, one after the other, whereas Kraken was smooth. So that could be just, So, all right. And maybe if we look at Kraken,
can you look at them together?
Like, yeah, I can't superimpose them on the same chart. I'd have to set up the workbench to do it. It might take a bit of time. But
that's way smoother. I mean, that's not even.
Yeah, no, that looks okay. But yeah, anyway,
it's interesting how it follows price. As the price goes down, people get more scared, remove their coins from exchanges.
Right.
Alongside the news, it almost looks like a price chart. It wasn't always that way though. There's times when those are sort of opposing at the top.
Well,
obviously.
you know, in the bull market, you're like very much like, you know, shitcoin trading, your
Yeah, you
Bitcoins and
ride the
shitcoins
trend
and
and all
stuff.
your coins are on the exchange because you're actually trading them.
Yeah, and then now you just pull them into cold storage and forget about it for a year and come back to it, which is probably the best move in a bear market. Go on holiday a bit, sort of
Yeah,
things
I think
like
that's
that.
what
So,
everyone's doing. Is there a way that like on-chain analysis could have showed us that customer funds were being misused, or is it just cannot get that granular?
I mean, it's a. I mean, from these kind of charts, you can't tell, right? But um, sure, you can get granular. Like you could say these funds left FTX and it went to, you know, a labeled address that was Alameda. And it's like a massive amount of coins that are customer funds. And you can say that's way too big to be just their own collateral. And so you can do it that way. We obviously can do this with Ethereum as well. So yeah, you can. It takes a lot of granular work and detective work. And I guess nobody did that work.
No, but I
No
hope
one
that maybe
called
we'll
them
do
out.
it in the future now that we've learned those lessons, which is why it's worth asking the questions. Like, what did we miss? And so we can look for it, right?
I just think that no one wanted to call out FTX or SBF because you know, particularly the institutions that would have had knowledge of this.
They killed themselves, like suicide.
Yeah, right. It's not in their vested interest to call them out. If FTX survives, they're going to be on the back end of any deal. So you know, it all took till like one article on Coinbase that really started it, and one person did call it out, and that was CZ, um, and that unwound it. So
Scary to me, the power of a single tweet in this space. It's
yeah,
really,
it was
I mean, it's
like there's like
crazy.
what happened was
I mean, the
the
guy literally didn't even have to sell anything, right? Then CZ came back, said, "We're not actually selling our FTT." Right? Kidding.
yeah,
Talk
right.
to Sam.
And
So
if
just
you
the idea that they could possibly collapse it was enough to send the bank run, and it's crazy.
the fact that SBF gave like when they bought back the shares, the 10% equity from Binance, the fact that he did it with FTT token tells you that they weren't solvent, right? They didn't have
Yeah.
cash. And why would they give them FTT tokens? Why would you give your arch enemy the power to dump you when it didn't make sense unless your back is to the wall?
Yeah, it's the only money you can give, and you can print more. So hey, free money.
Yeah, right. So yeah, but
Yeah, the
but he
whole
was essentially sending, giving CZ the keys to destroy FTX in that deal, right? Like he knew that he was levered long, and FTT needed to be above, as we know, $22 now. And if it dropped below that, he's kind of margin called. Yet he gave his arch enemy, you know, what is it, $500 million FTT token that could be dumped at any time. It's like,
didn't view him as an enemy at the time, and then poked the wrong dragon there, I would say. I mean, it's crazy for such a smart guy to see in retrospect all the absolutely stupid things that SBF did.
well, it's just like back to the wall, right? Back to the wall, and you could see it in his jitteriness as he was taking more and more amphetamines near the end of it, as we can guess. Um, so yeah, one thing led to the next, to the next.
Wow, man. What a shit show. Well, listen, the good news is I think that a lot of indicators say that we are bottoming, and hopefully we've learned some lessons and can look for signs of similar things happening in the future. I don't have so much faith in humans, but maybe at least I can have faith in talented on-chain analysts. So we'll be hoping,
Crossed,
man.
right?
Willie,
Fingers crossed.
first of all, before I let you go, where can everybody follow you? Obviously, Woonomic on Twitter, but and check out everything that you've got going on.
Yeah, thanks. That's it, really. Just go to the Twitter, and that's it, really.
What a
Um,
humble guy. He's got a lot more going on than a Twitter account, guys, but hey, you can find it all on there. Willie, man, I thank you very so much for coming out of retirement, I guess, for a little while. I know you haven't done this in quite a bit. It's always a pleasure. And Sometimes I miss your responses to my tweets that are so amazing because I don't check the replies with all the bots. But every time, man, I literally laugh out loud every single time you respond.
I love your beer market humor. It's like, we've got to do something during this time, right?
That's my coping mechanism, right? And people don't realize that it's like sarcasm half the time, which makes it even more fun. The best one, when I joked that the best, I think, I can't remember the exact tweet, but you obviously know it, where I recently said, time is your most important asset. So you shouldn't have kids. I thought everyone knew that I have kids and I love my children, but literally everyone thought I was serious. And then you responded that it was actually love and time. And then you closed with, so you should spend your time on coke and hookers and not kids. And I literally died. Yeah. So funny.
That's right.
So funny. So thank you very much. Look forward. You're welcome back anytime. And everyone else, we'll be back tomorrow morning, 9:30 a.m. Eastern Standard Time. We have our roundtable, and nothing's confirmed yet, but we might have some very, very unexpected special guests. So you guys should tune in for that. Willy, thank you once again. Everybody else, thank you for being here. I'll see you at 9:30 a.m. tomorrow. Peace, guys.
Okay. Catch you, Scott. Have
Thanks,
a good one. Bye.